Hey everyone, welcome to our deep dive today. We're going to be looking at some expert predictions about how a second Trump presidency could impact the property and casualty insurance world.
Sounds interesting.
Yeah, we've got some fascinating insights from Assured Research to dig into. They're a really well-respected source in the insurance industry.
Oh, yeah, I've heard of them. What kind of things are they predicting?
One of the first things that jumped out at me was their take on deregulation. It seems like a move toward deregulation in financial services might not directly hit P&C insurers at the federal level, but
But there could be a trickle-down effect.
exactly. That's what Assured Research is calling a ripple effect. They say this push for deregulation could spill over into state-level regulations.
Oh, I see. So instead of having one clear set of rules, insurers might have to deal with a whole patchwork of different regulations depending on which state they're operating in.
Right. That sounds like a logistical headache for these companies.
Oh, for sure. And that complexity usually means higher costs for the insurer, which could end up impacting the premiums that we pay for coverage.
That's a great point. It's easy to get lost in the policy weeds, but remembering how it could affect our own wallets is a good way to keep things grounded.
Absolutely.
Okay, so Assured Research also predicts higher deficits and a steeper yield curve. Could you remind us what a yield curve is and what it means for insurers?
Sure. The yield curve is basically a graph that shows interest rates over different time periods. A steeper curve means that interest rates for longer-term investments are higher than those for shorter-term investments. So what Assured Research is suggesting is that P&C insurers might see this as a chance to extend the duration of their fixed income investment.
So they're locking in their money for longer to get those higher returns.
Exactly. And that could lead to increased book yields for insurers, at least in the short term.
Makes sense. Are there any risks associated with that strategy, though?
Well, one potential risk is that if interest rates take a sudden dip, insurers could be stuck with those lower returns for a longer period. It's a bit of a gamble.
A calculated risk.
Yeah, but one that many insurers might be willing to take in this economic climate.
It's fascinating to think about how these big economic trends can influence the decisions that insurers are making.
Okay, so we've talked about potential regulatory changes and shifts in investment strategies. What else is on Assured Research's radar?
Well, they talk about that risk-on atmosphere we mentioned earlier, capital markets being flooded with cash.
Right.
Well, that creates a perfect breeding ground for mergers and acquisitions in the insurance industry.
Oh, this is where things get juicy. Assured Research actually predicts a wave of private equity exits from insurance investments sometime between 2025 and 2027.
And those exits could start a chain reaction fueling even more M&A activity as companies try to position themselves and increase their value ahead of potential acquisitions.
So it's like a feeding frenzy with everyone trying to grab a piece of the pie before it's gone. You could say that. But how does all this M&A activity impact the average consumer? That's the question.
Good point. Does it mean higher prices or fewer choices?
Well, one potential impact is on pricing, for sure. When companies are trying to grow quickly, especially leading up to a merger or acquisition, they tend to focus on top-line growth, which can put downward pressure on premiums.
So in the short term, this could actually be good news for consumers looking for lower insurance rates.
It's possible, but we also need to consider the long-term implications. If a wave of mergers leads to less competition in the market, it could eventually give the remaining bigger companies more power to set prices. It's a tricky balance.
It is, and one that regulators will need to keep a close eye on.
Absolutely.
It's a reminder that even seemingly positive trends can have downsides if we're not careful. Speaking of balancing acts, let's switch gears for a second and talk about health insurance. Assured Research brought up the potential expiration of premium subsidies for ACA health policies and how that could affect workers' comp insurance.
Right. That's an important connection to consider. If fewer people can afford health insurance, they might be more likely to depend on workers' comp for medical expenses after an injury on the job.
So we could actually see a reversal of the long-standing trend of declining workers' comp claims.
Exactly. And that could have a significant impact on the costs of workers' comp insurance, both for employers and employees.
It really highlights how interconnected the insurance industry is. What happens in one area can have ripple effects across the board.
It's all part of the same ecosystem.
Okay, so we've covered a lot of ground already, from potential regulatory shifts in investment strategies to the impact of M&A activity and the link between health insurance and workers' compensation. It's clear that the insurance industry is facing some interesting challenges and opportunities in the years ahead.
Definitely a lot to watch.
Yeah, a lot to watch and a lot to think about. But before we dive into the next layer of insights from Assured Research, I think it's time for a quick break.
All right, so let's talk about something that always seems to stir up controversy: environmental liability.
Oh yeah, that's a big one.
Assured research suggests that with a potential shift in the political climate, insurers might be less likely to set aside huge reserves for environmental liabilities.
Hmm, that's interesting. Why would they hold back on preparing for those risks?
Well, it has to do with a combination of potential legal and regulatory changes, the possible rollback of the Chevron doctrine, plus the anticipation of more industry-friendly regulators, creates a lot of uncertainty.
So basically, insurers are hesitant to make major financial commitments until they have a clearer picture of how the legal and regulatory landscape will shake out.
You got it. They're in a wait-and-see mode, watching to see how these shifts might affect future claims and legal precedents.
But isn't there a risk that delaying those reserves could backfire? I mean, what if environmental claims start piling up in the future and they haven't adequately prepared?
That's definitely a risk they're considering. It's a tough balancing act between managing their current financial stability and anticipating future liabilities.
It makes you wonder about the potential consequences for both insurers and policyholders down the road.
For sure.
Okay, moving on. Assured research also touched on the evolving landscape of insuring what they call dirty energy companies.
Yeah, that's been a hot topic lately. While the momentum behind green and renewable energy is still strong, assured research suggests there might be a bit of a softening in the stigma associated with insuring fossil fuel companies.
Interesting. So is this more about a shift in public perception or a change in the insurer's willingness to underwrite those risks?
It's probably a little of both. On the one hand, the urgency of tackling climate change continues to push companies to move away from fossil fuels. But on the other hand, the need for reliable and affordable energy remains a key factor.
Right, it's a complicated issue with a lot of competing interests and priorities to juggle.
Absolutely.
Speaking of complicated, let's move on to something that even has assured research scratching their heads: cryptocurrencies.
Oh, yeah, that's a whole other can of worms. The rise of cryptocurrencies presents both exciting opportunities and some serious challenges for the insurance industry.
Especially when it comes to cyber insurance, right? We're seeing more and more cyber attacks targeting cryptocurrency exchanges and individual investors.
Definitely. And the decentralized nature of cryptocurrencies makes it even trickier to assess and manage those risks. Insurers are still figuring out how to quantify and price those risks effectively.
So it sounds like the insurance industry is playing catch-up, trying to adapt to this rapidly changing technology landscape.
That's one way to put it. The insurance industry is constantly evolving, responding to new technologies, shifting political climates, and changing social expectations.
And as we've seen today, those changes can have a domino effect across the entire industry, impacting everything from investment strategies to the types of risks they're willing to take on.
It all ties together.
It does. And for people like us, it's important to stay informed about these trends and understand how they could affect our own insurance needs and costs.
Couldn't agree more. Knowledge is power, especially when it comes to navigating the complex world of insurance.
Okay, so let's talk about the big elephant in the room: economic inflation.
Oh, yeah. Can't forget about that.
Assured research points out that property and casualty insurers are usually pretty good at handling inflationary pressures.
They are. But they also stress the importance of having that regulatory flexibility.
Right. That flexibility is key. Insurers need to be able to adjust their pricing as costs go up, especially in areas like auto and home insurance, where claims costs are directly impacted by inflation.
Exactly.
So if you start to see your car or home insurance premiums creeping up in the next few years, inflation could definitely be a factor.
Yeah, that's a good point. It's a reminder that those big economic trends we talk about can really hit close to home. Literally.
Okay, one last thing that Assured research highlighted is the uncertainty around what's going to happen with the Inflation Reduction Act and the CHEPS Act. These were big pieces of legislation with the potential to influence a lot of industries, insurance being one of them. But with a change in administration, it's not clear what their fate will be.
It's definitely a wild card to keep an eye on. Those acts were creating insurable exposures and boosting economic activity, which in turn was driving demand for insurance products and services.
Oh, if those acts are repealed or replaced, it could really shake things up in the insurance world.
Absolutely. It's like a chain reaction. One thing leads to another and the whole system starts to shift. And that brings us back to one of the key themes we've been exploring: the interconnectedness of the insurance industry.
Everything is connected.
It is. We've seen how political decisions, economic trends, technological advancements, and even social attitudes can all come together to shape this dynamic and important industry.
It's like a giant web where one thread can tug on another and create this ripple effect across the whole system.
Exactly. And that brings us back to one of the core themes we've been talking about today, right? This whole idea of how interconnected the insurance industry really is. It's a system where political decisions, economic trends, new technologies, even social attitudes all kind of converge and shape this really dynamic and essential industry.
And understanding those connections is key for figuring out what the future holds for insurance, not just for people in the industry, but for anyone who needs insurance.
Absolutely. It's about seeing the big picture, recognizing those patterns, and anticipating the potential consequences of these complex and ever-changing dynamics.
Well, I think we've done a pretty good job of unpacking some of those insights from assured research about how a second Trump presidency could potentially impact the property and casualty insurance world.
Yeah, we've covered a lot of ground, haven't we?
We have. From those potential shifts in regulation and investment strategies to the whole debate around environmental liability and the uncertainty surrounding some key pieces of legislation, it's clear that the insurance industry is in for an interesting ride over the next few years.
And as we've highlighted throughout this deep dive, the key is to stay informed, think critically about these trends, and understand how they might affect us, both individually and as part of the broader economy.
Because at the end of the day, the insurance industry plays a vital role in our society. It provides a safety net for people, businesses, and even entire communities.
And as we move forward, it's important that we have these thoughtful conversations about the future of this dynamic and essential industry.
Well said. I think that's a great note to end on. Thanks for joining us on this deep dive. We hope you found it insightful and maybe even a little thought-provoking.
Until next time, stay curious, keep learning, and stay engaged with the fascinating world around us.